Very good morning to Dr. Affiruddin with TAPA and my dear friends. Today, myself, JAGGATHESWAREE, daughter of KATHIGASU, number metric 281151, along with my group members would like to present about our portfolio. Before go further, I would like to give a short briefing on our group assignment. In this assignment, we have created a trading portfolio with 100,000 in investment capital to invest in 5 equities. The 5 stock companies that selected by our group members are Nestle Malaysia Berhad, Maxis Berhad, ZAINUDDIN Berhad, TNB Berhad, and Nestle. Firstly, let me give a short brief introduction on the background of Nestle Malaysia Berhad. Nestle is the world's largest manufacturer of food and beverage. Nestle, headquartered in Switzerland, is present in more than 180 countries worldwide, and its over 270,000 people are dedicated to the Nestle's mission of enhancing the potential of food to improve the quality of life for everyone today and future generation. But in Malaysia, the Nestle Malaysia Berhad was there since 1920 while upholding our halal excellence and integrity. Nestle Malaysia Berhad worked as an investment holding company. Nestle was listed on the Bursa Malaysia within the main market in 1989. Next, let's look at the economy analysis. Under economy analysis, we have analyzed monetary and fiscal policy and also other economic factors that affect the economy of Nestle. Okay, firstly, under the monetary and fiscal policy, there are governance system, tax policy, changing policy with the new administration, and government resources allocation and time frame. The mean of taxation policy is there are changes on the tax rate according to the governance, because there are sometimes the tax on the price will be increased and the tax on the price will be decreased. When the tax on the price is increased, that will be affect the sales of the Nestle, because the price of the product will be increased together with the tax on the product. Next, we look at the other economic factors. There are so many, such as rate of foreign exchange growth in United States and the Chinese market, expansion in the comfort food sector, inflation rate, economic cycle, and downward pressure on the consumer spending. Next is industry analysis. Under industry analysis, we're going to analyze the growth cycle of industry. Firstly, there are 4 stages in a company cycle, which is introduction, growth, maturity, and decline. First, at the introduction stage, this stage where the products was introduced for the first time and the market sales are started to grow slowly and from the minimal and not attained. And then next stage is growth. And this growth, Nestle has been presenting its product already to the market and consumer about their products. So the customer are becoming satisfied with the product of Nestle and trying to buy it again and again. Next stage is maturity. In this stage, Nestle product cost has been decreased because of increased volume of the product and also profit. The more and more the competitors has been to be leaving the market, in this another way, very few buyers have been left for this Nestle product and result less sales of product. And the final stage is where all the companies will be on the decline stage. At this stage, Nestle's profit as well as the sales of the Nestle has been started to decline because of the delay of the product from the market. Next, we can look at the fundamental analysis. Fundamental analysis, as we know, that it's basically on the financial analysis. So first, we look at the liquidity ratio. Liquidity ratio is we have analyzed the current ratio and quick ratio, which based on the financial statement of 2020 until 2021. So based on the current ratio, there is increase in the ratio that indicate the more liquidity in 2020 and has no trouble to paying the present payment on the time. And also we can look at the quick ratio. Quick ratio, there is a decrease in this ratio, which means that the extending assets are slightly struggling to transform it into cash when it's needed. Look at profitability ratio, there are 3 under this ratio. Profit margin, there are increase in this ratio. It means the Nestle is still expanding and generating more income than the previous year, which is 2020. And return on equity ratio, there is a decrease in this ratio, which means Nestle need to improve the efficiency in utilizing money from the shareholder to generate profit in the coming year 2022. Next, the return on the asset ratio. There is an increase in this ratio, which indicates the Nestle can convert the money used to purchase asset into net income in order to increase the company assets. So we look at the leverage ratio. Leverage ratio, we have analyzed this one, which is debt to equity ratio. There is a decrease in this ratio, which indicates the Nestle is reduced its risk of debt than the previous year, which is 2022. Next, we look at the efficiency ratio. As we know, efficiency ratio, there are 3 basic things we will look under this ratio, which is asset turnover. There is an increase in asset turnover. That means the Nestle has more efficiently leverage its asset to produce sales. Next, inventory turnover. Inventory turnover has shown decrease. So it means there is a drop in sales and falling demand for the Nestle's product. And then receivable turnover ratio, there is an increase in this ratio, which means Nestle have a high number of high quality customers who can pay their debt and bill on time. Market ratio. Under market ratio, there are four main things. Earning per share. Increase in earning per share indicates the company make more money for each outstanding shares on the stock market. And also payout ratio. Increase in ratio indicates the less net profit distributed to the common shares as dividend. Next, price earning ratio. There is also a decrease in this ratio because the company's Nestle's value of stock has been dropped. Dividend yield, but unfortunately there is an increase in this ratio. It means Nestle have a better operating of industry to generate the income. And finally, we came to the technical analysis. Deep strength index RSI. Nestle Berhad has shown for the first 9 days the value is 78.261, increase for the next 14 days with 37.931 before it's increased. So it shows that RSI for the Nestle Berhad is keep increasing for day by day. So it stays under 30 to 70 days. That means the investor cannot set to buy under 30 or sell below 17 days before the stock is weak or predict changes in trend. So next we look at simple moving average. Simple moving average is not certain, which 131.68 at 10th day and increased to 132.59 at 20 days. And it's keep increasing each single day until 250 days without dropping any single drop. At 250 days, the simple moving average reached to the highest among the other days, which is 135.07, and it sustains its value in increasing order without any drop. Let's look at support and resistance. During we done the analysis on the Kuala Lumpur exchange, the current price was 132.50 cent in the Asian Kuala Lumpur zone time. The price of Malaysia's Nestle shares is expected to rise during the next few months. The price has changed by 0.45%. It means like 45% in the last 24 hours, which means 0.60 cent. I mean 60 cent of Malaysian ringgit. The price of Nestle Berhad is began trading today at 132 ringgit 40 cent, with the highest price being 132.50 cent and also at the lowest price at 132.10 cent. That's all from me, and thank you.
Greetings, my name is VAHINI, anak perempuan THILLAI RAMAN. My metric number is 28 2072. I'm representing on the portfolio of Maxis Berhad. Berhad is one of the biggest company in telecommunication sector since it has been founded in 1995. This company provides telecommunication services to the whole Malaysia, and this company is constantly evolving its business model in 2013, and it was one of the first one to provide 4G services, and now it has been developed to 5G services. Is the economy analysis. Economy analysis consists of two, which is the monetary and fiscal policy, and also the other economy factors. So as for the monetary and fiscal policy, the first one is changing policy with a new government. As we all know, whenever there is a new election, then the government changes, therefore there's a new policies that have been always changing, and the possibilities that the service goals of the governments will also change. Therefore, the changing policies with a new government is affecting the economy analysis. And the next one is the importance of local governments in Malaysia. So as for the local governments in Malaysia is unlike the other countries, because they actually play a critical role in policy making and regulations. So instead of formulating national policy in Malaysia, Maxis actually should be closely monitoring into the states and territories where they operate. And the last one is the government resources allocations. So as for these, there is a potential that the government actually to boost investment in sentiment in the service sector, where it is given in general public support for the proposed measures, and it is safe to anticipate that they last longer than the current Malaysian government's authorized them. While for the other economic factors, which is the Malaysian economy performances, so Malaysian economic performance actually stays within 5 to 10 years due to the government spending, stable demand due to disposable income, and also increased investment in new industries. Next is the financial markets are efficient. So Maxis can leverage the active financial market and quick liquidity in Malaysia equity market to develop further abroad. Malaysian core. And the next one is the Malaysian core infrastructure availability. The Malaysian government has boosted its investment in core infrastructure development throughout these years in order to facilitate and improve the business environment. So Maxis could take the advantage in existing infrastructure to help the Malaysian services sector to thrive. As for the fundamental analysis, this analysis is to evaluate what is the progress of the Maxis in generating the income, and how the assets are used well, and the capital that the shares has been provided is used well. So as for the revenue in 2021, it is higher compared to the year 2020, which indicates a good positive relationship. Therefore, the next is the profit making. In 2021, the profit making it's considered low compared to the year 2020, maybe due to the COVID-19 pandemic. They could not generate their income well. While for the profit margin, it is 14.36%, while in 2020 it's 16.49%, which indicates that the Maxis should do more improvement in their profit making because of their sales is not increasing, but there's opportunity that the sales is going to increase because of the 5G development has been made. And the EPS is 4.20, which is less compared to the year 2020, which is 4.7, while for the earning per share, which is 112.94 in the year 2021, and in the year 2020 is 108.88, which indicates that there is a high chances that a lot more investors going to invest in this company because of the new development in the telecommunication sector. While for the technical analysis, the RSI, which is the relative strength index, in the first 9 days, it indicates that 46.875 and increased in the next 14 days to 52.381, and it decreased again in 25 days, which is 46.324. Next, as for the technical analysis in moving average, from the 10-day to 250 days, we can see that this company has improved so much because it has a constantly increasing, because from the 10th day, which it started from 4.305, it increased little by little, but in the next 255 days, it increased about 4.627, which indicates that this company shows a good progress. As for the last technical analysis, which is support and resistance, in the beginning, the share price was started from 4.29, and right now it is at 4.37 for the last price, and it is estimated to increase about 4.44, and it could be increasing more. This is because of the new development in the telecommunication sector and having 5G, so their sales are going to increase and the share price might be increasing as well, and this is going to give an improvement to the Maxis company, and there's going to be high chances there's going to be a lot of more investors going to invest into this company, and therefore I would like to end my Maxis portfolio here. Thank you.
Assalamualaikum, and my name is ZAINUDDin, 6502, and my company ZAINUDDIN Berhad, which is ZAINUDDIN is a company that is trade in the main on the main board of Bursa Malaysia Security Berhad, and they representing substantial presence in the plantation, real estate, industrial, automotive, energy, and infrastructure and hotel sector. And the economic analysis, we have the anti-bribery and anti-corruption. ZAINUDDIN and Berhad and its subsidiaries are committed to conducting business dealing with integrity. This means avoiding the practice of bribery and corruption of all forms in the company's daily operation. The group has adopted a zero-tolerance approach against all forms of bribery and corruption and take a strong stance against such acts. Okay, for the industrial analysis, we take a look at the growth opportunity between a successfully high-performance organization. As the ZAINUDDIN continue to grow, they recognize the numerous and invaluable tolerance among them and ensure they are in their optimal role at the right time. Okay, for the fundamental analysis, finally, ZAINUDDIN earning per share was 2.8 cents compared to the previous loss of 3.5 cents per share. In the Bursa Malaysia report today, ZAINUDDIN said the revenue increased by 30% to about 3.18 billion from the 2.82 billion previously. And we look at the technical analysis, which is, as you can see, I use the support and resistance by the chart. For the box, we can see that is the box for support, and the red box is for the resistance, which is another few days. If the price going up and touch the resistance, it will make the pullback, so it will ready to be a signal sell. If not, if we break this red box, the candle, so the red box will be the new support zone, and which means the signal will goes for the buy. I think that's all for me. Thank you. Have a nice day.
My name is A.KARIM, batch number 27148. Now we continue with TDM Berhad. TDM Berhad was established in 1st December 1965 and listed on Bursa Malaysia on 1970. TDM Berhad operate on plantation which are 44,244 hectares and operate on healthcare which are for specialist hospital, which is KJMC, KMC, KTS and TDMC. In 2020, TDM Berhad has been added back to the list of compliant securities by Security Commission. In 2020, Malaysia government has announced a few of monetary policy and fiscal policy. First, introduced package worth 200 25 billion for pemain, pemekasan pemulih. Second, additional fiscal injection, estimate 25 billion. And third, announced 8 economic assistance stimulus package totaling 530 billion with a fiscal support of 80 billion provided under COVID-19 fund. For industry analysis, there are a few achievements of TDM Berhad for plantation in 2000, streamline business to plantation in healthcare. 2007, expansion into Indonesia via JB agreement in Kalimantan. 2011, first plan began operating in Terengganu. 2013, obtained certification of Malaysian operations. 2017, first GLC to achieve 100% certification. For healthcare, 2006, first a fully licensed hospital established in Terengganu, which is ATS. 2011, TDMC acquired for 60.5 million. 2014, KMC completion of new building. 2018, the KTS completion of a new building. And TSH operate and manage. 2019, opening of a test lab in KMC. And lastly, 2020, opening of test lab in KTS. For fundamental analysis, we use a ratio, which is a liquidity ratio, profitability ratio, efficiency ratio, leverage ratio, and market ratio. The table shows the result of each ratio. For technical analysis, TDM price support 0.225 until 0.23, while TDM price resistance is 0.245 until 0.255. If the stock price fall above the support price, the stock expected to decrease under support price. Why? If the price exceeds the resistance price, the stock price expected to continue increasing beyond the resistance price.
Good day everyone, my name is MOORTHY. My register number is 282068. Today I want to present about the Liquidity Ratio. Okay, we go into the introduction of the company. The company started as Pacific Milk Industries during Berhad on 28 May 1963. It was incorporated as a private joint stock limited company. The main production of the company is condensed milk only before evolving into a dairy product. The company changed its name to Liquidity Milk Industry Berhad in 2000 and has been using ultra high temperature UHT processing and packaging technology. In 2011, Liquidity Malaysia was reported as a market share leader in the growing dairy segment, with the Liquidity brand holding 40% of the national market share. For the economic analysis, the first point is governance system. The company accepted a sound corporate administration structures are fundamental to guarantee maintainability as well as moderate business development. Then the taxation policy is the Liquidity Milk Industry. Exemption of the extra deals and administration charge, SSD on sugar, improved refreshments, and import obligation on dairy and dairy-based items. Then the economic analysis other point is halal policy. The workers are focused on giving halal item to its buyer by changing the halal pre-requested items. And then the other factor also changing estimates, changing in debt and equity, changing in new directors and foreign currency transactions. Okay, the industry analysis is they were the first on the planet to present a growing up milk equation range in 1980. And until now, the range is promoted as Liquidity 1 to 3, Liquidity 4, 5, 6, and Liquidity 6 plus. And Liquidity Malaysia will generally accept that the genetic measure of supplements and the advantage of milk is unquestionable and ought to be made a piece of everyday utilization. At Liquidity Malaysia, their greatest resources are its workers. We have and will consistently put intensively in a differentiated turn of events and commitment. Liquidity Malaysia obligation to sticking to driving industry guidelines has likewise added to our success stories that have effectively keep up with particular affirmation. For example, HACCP has an analyzed critical center point framework to cover all its creations plan, like also ISO 9001, ISO 4001, and etc. Okay, then we move to the fundamental analysis. First one is quick ratio for Liquidity company. For the past 2 years, the company has been facing some difficulty to pay its liabilities because the ratio for both years is below 1.0. The current ratio, generally assuming the proportion creates a work that is under 1 to 1, it infers a reliance on stock or other less current resources for exchange momentary obligation. In the year 2021, the company was able to rise up with some increment from 0.89 to 1.10. Then the gross margin, generally above 65% gross margin is a good for a company. But for the past 2 years, the company gross profit is almost the same with for the year 2020, the percentage is 32.44 and for the year 2021 is 34.46. Okay, the return on equity with 50% to 20% is good for company. In year 2020, the company ROE is 47.67%, and in year 2020, the 21, the company ROA is 39.63%. By observing this percentage in year 2020, the company utilized their capital in good manners. So return on in the year 2020 and 2021, the company ROE is at a healthy level. Okay, lastly, the technical analysis. Okay, we will talk about the relative strength index. Customarily, relative strength index readings more prominent than the 70 level are viewed as in overbought region, and R readings lower than the 30 level are viewed as oversold region. In the middle of the 30 and the
and 70 level is viewed as a neutral with the 50 levels an indication of no pattern. So for the period, the Dutch lady level is immense, so safe zone. Thank you.
For the conclusion, in this report, we have chosen 5 various industry companies to invest with the 100,000 ringgit Malaysia to maximize customers' wealth and also to diversify risk while investing in this stock market. So those 5 major industries that we have chosen is the Nestle Berhad, Dutch Lady Milk, Maxis Berhad, Sanjadi Berhad, and last but not least is TDM Berhad. So as we have found out during this portfolio that the economy is rebounding from the recession which caused by the COVID-19 pandemic, and as a result the economy is getting back to the normal, and the stock pricing are increasing in the company during the necessary time and the recovering time as well. So, and we have found out that the economy analysis is to assist us to analyze the economy environment so that we can predict and to value the stock prices which could be rising or falling throughout the recovery period. So therefore I would like to end this presentation here. Thank you.